My next guest is Randall Oliphant. He's the CEO over at New Gold. He's also the former boss at Barrick. He just came off his presentation. Randall, thanks so much for being with us at GSA Investor Day.
I'm delighted to be here.
So, Randall, your company recently has some impressive results. You finished the year with $414 million cash on hand. Gold reserves shot up by 127% to 18.5 million ounces of gold. I guess my question, Randall, is last year we saw the slash in the gold price. Gold price is really suffering. How did you manage to go against the grain?
Well, we saw 2013 as a year of opportunity. While everybody was afraid and running and not wanting to buy things, we thought when there's an 80% off sale with development projects, this is the time to step forward for a company trying to build for the future. So we did one of the few acquisitions last year. It was a project that we'd been following named Rainy River for about 5 years, and we took the gift that the market gave us of a steeply discounted project, which we know we can make much more valuable.
Are you looking at more acquisitions?
Yeah, we're always looking at acquisitions. We're pretty happy with the portfolio that we have, though, because you mentioned the growth that we've had. We think that we've got a portfolio that will enable us to triple our gold production, which in basically a no-growth industry is pretty unique. So we don't need anything more, but if we see a compelling opportunity, we're ready to act.
How much is it costing you right now to pull out 1 ounce of gold?
Well, our cash costs for this year should be about $320 to $340 an ounce, or all in, including all our sustaining capital and everything else, about $825 an ounce. So we believe that we may be the lowest cost gold producer in the world.
Randall, last year, I remember when I was covering the conference, I saw so many new faces in the industry. You've been in the industry a long time. What are some of the challenges that you feel you face as a CEO?
Well, we try not to follow market sentiment too much. We know that the themes change where people want gold companies to consolidate, then break themselves up, then build projects, then don't build projects anymore. And we try and somewhat go against the grain. We know that the best opportunities when everybody's afraid to buy, we know when our industry, like in 2011, is doing record amounts of acquisitions, we were focused on developing some of our mines. So we just try and keep a steady head about us and say, what's the right thing to do for 3 or 5 years from now?
Do you think it's a good time now overall for mining stocks? Do you think a turnaround will happen?
Oh, I do. I think this is probably a once-in-a-generation opportunity. And while that sounds extreme, in terms of price to net asset values, price to cash flows, gold stocks have never traded at the low levels that they do today. And with the pullback that we've seen, it's quite an opportunity. And we expect gold prices to be higher going forward. So this is a time when we ourselves are trying to get more.
So let's talk about that gold forecast for a second. Randall, you also wear the hat of chair of the World Gold Council, recently elected there. What do you think will propel gold prices higher?
Oh, I think the thing that'll push them higher is just supply is largely flat. Central banks that used to be sellers have become buyers, and they've done it each year in the last 5. We see the biggest markets in the world, China now the biggest consumer, which is the most populous country with a growing economy. India, number 2, again, second most populous country with a growing economy. We see more interest from the investor base, like sort of institutions. So we see broader-based demand, basically flat supply, and while we had some sell-off last year of U.S. hedge funds largely selling to Chinese and Indians, we know that those are going into stronger hands, not temporary holders, and it's never coming out. And as their economies continue to grow, their propensity to want to own gold has always been strong. We think it's a wonderful customer base to have.
Randall, is there a certain trading range that you're looking at within the next 6 months?
Well, we think gold's more likely to go up than go down. We're actually pretty comfortable because even at where gold prices are today, we're generating margins of $500 an ounce. But I think 2014 is going to be a really good year for gold. We've already seen a nice start to the year, but I think we're going to finish a lot higher than where we are today.
And when we say a lot higher?
Hundreds of dollars higher.
Hundreds of dollars. So if we talk $2,000 gold, is that a crazy idea for you?
I don't think it's out of the question. Markets don't move in one direction. We saw, when gold ran up in the 1970s, it pulled back, I think, about 46% and then continued to go to record highs. We had a pretty good 10 or 12 years in gold. We had a year of stepping back by 28%, but I think that we've already seen the direction has changed this year, and I don't see any reason why we can't go to new records.
On that note, Randall, thanks so much. We'll see you at PDAC next.
Great to be with you. Thank you.
And thanks for watching our coverage from GSA Investor Day here in Fort Lauderdale. We'll have more for you throughout the day. In the meantime, you can email me any comments or questions at newsfeedback@kitco.com or follow this conversation on Twitter at Daniela Cambone. Thanks for watching.